Investors and traders, welcome to the channel. Market chart pattern. Today is 18th of September 2024. Hope everyone is having a great day. It's been a really important day today with the Federal Reserve coming out. Before we get into the details of this, this video is for educational purposes only and it's not a financial advice. With that out of the way, so we had the Federal Reserve FOMC meeting today. Fed came out and they dropped the interest rates by 50 basis points, which is half a percentage point. Now, this is quite a large rate cut to start the rate cutting cycle. Normally, if you look at some of the other central banks who have actually gone and cut the rates, such as the European Central Bank and the Bank of England, they started with quarter percentage point or 25 basis points. So quite a large one, but this is something which we had been discussing because one of the things was if the Fed were to cut by 25 basis point, the market might not have liked it and could throw a tantrum. If it would have been 75 basis points, that is a very large rate cut, which means that probably the on an economic front things are pretty bad, so maybe the market might not like that, and 50 basis point was kind of what was being baked into the price, and this is what got delivered. Now the interesting thing is that with the embarkment of a rate cutting cycle, this is to stimulate the economy, of course, because if things are really good and heating up, then the central bank is actually raising rates, and this is what we had seen throughout, for example, 2022, when they started their cycle, I believe in 2021, even in 2023, and now they are having to cut the rates to stimulate the economy because of what we see happening in the job market. For asset classes to stimulate the economy, a rate cut would actually be something positive. But what we have seen is on the back of good news, we have seen bad price action. So this is the direct feedback from the market, and what we should be looking for is further confirmations coming in the price action tomorrow and Friday to end this week. This is something that we were discussing yesterday in yesterday's video. I showed you that on the Nikkei chart we have, which is the Japanese stock market, we have a key timing coming in, which is tomorrow, 19th of September. And in fact, with the timing, we have to give 1 to 2 trading days on either side. So in fact, the timing had already kicked in, and what we are beginning to see is actually some of the key markets which are showing signs of reversal, possible reversals. But we had already been discussing them, and the key two markets are we are going to take a look at is the US dollar, and even more impactful is the interest rate markets, which is the bond markets and the notes. So starting with the US dollar, what we see is the 107 being a top. The market has actually gone and completed our patterns, and in fact what it did is it was just hovering around here yesterday, finding structural support. Today, with the decision coming out, it went lower and it went into towards the 9th of July 2023 lows. And what it did is, this is something important, it actually retraced all of that weakness and in fact closed. Let's see if it closed positive. It closed just by a half a pip negative, but it closed above this structural support coming from the 28th of December 2023. So what it means is that dollar is getting a little bit stronger, it's getting firm, and this is what we were expecting, because we discussed, because of the structural support, there's a possibility for the dollar to get as strong as 103.50. So let's see what sort of follow through we get in terms of price action tomorrow. And if we were to take a look at the Bitcoin, you can see that the Bitcoin had a pretty muted price action today, and it was let's see if it was able to take out the highs of yesterday. So it did take the highs out of yesterday just by a little bit, but then it actually closed back into the range. So this is basically a trading range day for the Bitcoin market. And if we just go and have a look at, if we just go and take a look at this price action like this, if we were to draw a trend line, you can see that the trend line is capping this rally. And then where this market was today, it basically tried to take out the highs of 28th of August, but closed back into the range. And if we take a look at this on a smaller time frame, such as the 2 hour, you can see that this is the trend line. This is blue line is the same trend line which I've just drawn on the daily chart. Just blue one is only visible on 2 hours. So the low that the rally that we are seeing off the lows of 6th of September, in my opinion, they appear to be more of corrective nature. One of the things is that look over here, we have this spike price action. The market tried to get above the highs of 23rd of August. It wasn't able to do that, and maybe took out some stops over there, and look a big decline right in the 78.6% retracement of the lows of 5th of August. And now what we are seeing is basically we had this first ABCD completed right here on the 17th of September. So that was yesterday, and today the market actually just went a little bit higher than the highs of yesterday, and here it closed back into the range. So there is fair amount of resistance here. There is a resistance from the structure of 29th of August. We have a completed ABCD one-to-one price projection. We also have the 1.272 expansion just a little bit higher, around 61,500 roughly. So a number of things going on in the trend line as well. So this region could in fact be a pretty strong resistance for this. And then the on the way up, it's really interesting what the market was doing. It was actually sign of a strong trending market, because when it had its first in this move higher, swing higher, the first retracement was right to the 38.2% retracement, and then it had the second swing higher, and when it retraced, it went right back to the 38.2% retracement. And you can join, and you can have join these lows, and you can have this trend line. So now this trend line is really important. What the market did today is a little bit different. It actually retraced about 50% of this swing high, and if there is a pullback, then if this trend line is broken to the downside, then I think we begin to look at least for a retest of these lows sometime. So this is what we are watching in the Bitcoin, and we'll have to see how the Bitcoin will actually trade from a price action perspective. But you can see it is a pretty range bound market. September is key month per our analysis, per the Lucas time spiral for this market. And you can see that it has respected these bigger ABCDs right here. So the real key is 50,000. If the not 50,000, sorry, the lows which are here, about 49,500, if these lows are taken out to the downside, then we could see a further pullback into the price of Bitcoin. Now, just off the back of the dollar, if we just take a look at the Great British Pound, and tomorrow we are going to have the Bank of England coming out with their interest rate decision. So let's take a look at what this market is doing. So you can see that as the US dollar has been weaker, the British pound has been stronger, and it recently completed this really nice ABCD right at 38.2% retracement, and it has had a nice rally. But today, this is 18th of September price action. The market was pretty strong, and when the Fed came out with their announcement just before that, the market actually began to lose some of its gains. And I don't like this wick on top of it. This wick is a little bit larger than actually its body, so it looks like there is a fair amount of sellers who were just sitting here, and then they began to actually either take profits, or if there were this, all those people who were long took profits, or maybe new sellers also began to join, and they brought it down quite a bit. But still, it's pretty strong, British pound. So we'll have to see what the Bank of England is likely to do tomorrow off the back of a big rate cut which the Fed gave us today. Maybe they also cut another quarter points. We'll have to see. And on the flip side, let's take a look at the Euro USD, and a similar kind of pattern to the British pound, but the British pound has been much stronger because it was actually able to take out these highs, and the euro has actually not been able to do that. So there is a fair amount of selling pressure in here as well, which is off the back of US dollar getting stronger. Now the most interesting one is actually this Japanese yen. This is the one which we took a look at yesterday, because something really interesting about this chart is that the Japanese yen had actually taken out the lows of 5th of August, and then it formed this pattern formation which is highlighted in green. So basically it's finding structural support coming in from December of last year 2023. In today's price action, where the dollar got stronger, we have seen it's quite a bit of a trading range actually, but the chances are that actually the dollar is going to strengthen against the Japanese yen. And if we just take the market symmetry concept, this was how much the last move was, so we could expect the market to go and test these swing highs around 147 10 level. So this is what we are watching in the Japanese yen versus the US dollar. Now moving to the treasuries. So a quick look at the 2-year Treasury note. It has, of course, I've discussed this many times before, met and exceeded our 3.9% target, and now it's also finding some structural support from the lows of March of 2023. Now I'm going to just blow this up a little bit so that it's easier to see. Here we go. You can see how the yields behave today. It's been a quite a lot of volatility, but also at the end of the day was a trading range day because a small body around here. But we have had support come in around the 3.5% level for 1, 2, 3, and then there was also some between that. So about a week you can say that the market price has been hovering around 3.5%, which is telling us that that level is really strong, which the market is not breaking to the downside. So from here I'm also looking for the yields to actually get stronger. And here we go. We have the 38.2% retracement. It comes around the 3.75%, but I believe the yields could actually in fact go and hit about 3.85% as well, on the shorter end of the curve. I'm not sure whether the market will do as much of this kind of recovery or retracement, but I cannot rule it out either because of the concept of market symmetry. And let's see what sort of percent, whether it'll be a 61.8% or yeah, it'll be actually a 78.6% retracement, nearly 4%. So this is doable by the market because it has done this kind of a move before, so it's also possible. Now the real interesting one is actually the 10-year treasury note. So if we just look at the TNX chart, you see what the market has done. It actually closed higher. It's not a very nice looking candle here, but what is showing is we have had basically strength in this area here. And the yields actually closed higher at 3.68%. This is easier seen on the 10-year treasury note bond futures, and here this is the pattern that we had been watching. So as I was mentioning yesterday, I needed a little bit more clarity from price action perspective. I think I got that today from notes and bonds, because this one had completed the ABCD right here, where we also had the 1.272 expansion, and then actually the market moved lower, or the yields went higher. And what we are seeing now is also a basically move of 1.272 expansion of this swing, and the chances are we are actually moving lower or yields higher, and we can in fact test this trend line here. Now moving below this trend line, in my opinion, could actually make this price go and test even possibly this breakout area as well. So that's going to be a fair amount of a move to the downside, but the chances are we might just get something right towards the trend line, respecting the market symmetry. Now if we take a look at the 30-year bond futures, this is something really interesting, because I was expecting that the market has a little bit higher to go because of the CD leg, which might still be the case. But as things stand right now, look at this green shader region, because what we have going on here is basically right at this, we have the 1.618 expansion of this swing. We also have this ABCD, not a perfect ABCD but close enough. And then what we have seen is yesterday the market took out the highs of 11th of September highs but closed lower, and then today we also got a follow through. So the chances are that this market is actually also rotating lower. So on the longer end of the curve, we are seeing the yields go higher. Now it's interesting that when the Federal Reserve has actually come out and made the public announcement of a rate cut, we are seeing these yields actually rise. So this is something really interesting to watch, because it looks like the market had been going up, our yields lower in expectation of rate cuts, and when we get that, we see an opposite price action. So it's kind of buy the rumor, sell the fact. There's saying like this, something similar to that, and in fact, this is this is the kind of scenario which is taking place, or good news and bad price action. So we can see that this is the kind of pullback we had seen last time. So we could easily do something similar and move to about 124 to 123 handle. We'll have to wait and see what we get in terms of the price action. Now, one of the things is what I discussed yesterday as well, especially for the 10-year Treasury note, because it has already moved in expectations of their interest rate cutting cycle to begin. We might not get a lot of upside or much lower yields, in other words. And if we were to just take a look at the TLT, which is the ETF for 20 plus years, it's got a very similar pattern to the 30-year bond futures. I was expecting perhaps it could reach to about 104, possibly 105, which still is on the cards. But what we are looking at right now is in this green shaded region, right from the 1.272 expansion ABCD. I think it looks like the way it has closed today. Negative closing candle. It's a follow through from yesterday, and it closed on the bottom of its with no wick at all at the bottom. So strong selling pressure. Looks like it's got more further to go down to the downside. Now, something really interesting, and let's move to the S&P 500. This is the cash market. This is the S&P 500 cash. Look, this is what we were discussing yesterday, that the Federal Reserve is about to start their cycle of interest rate cuts to stimulate the economy, and what we see is basically a negative close. And today, if you look at this, the market actually formed a new all-time high. So S&P 500 made a new all-time high, and what did it do? It actually closed lower. So in fact, the market was down about minus 0.29% or 16 points. So this is really interesting, and let's see what if we get a follow through, what sort of price action we get tomorrow, which is Thursday. We are getting some key financial data, economic data out tomorrow as well, and then the end of the day, end of the week will be Friday. So this is something to be noted. And if we just move to the futures, you can see that futures also made a new all-time high but also closed lower by 11.5 points. So now let's take a look at what the and also let's take a look at the SPY as well, because this ETF is traded a lot, and you can see that new highs, and then not a good looking candle formation. Now let's take a look at NDX, which is the NASDAQ 100. This is what we were watching yesterday. Look at this trend line on the daily chart, and here we have got an attempt to basically take out yesterday's highs, but then closed lower. And in fact, this market has been down by about 87 points, 88 points, about nearly half a percentage. The key thing is that S&P 500 is making new all-time highs, but NASDAQ, in my opinion, might have topped because of that big ABCD. I'll just show that to you on the futures chart. Is it's just nowhere near in terms of its recovery as of yet. And let's take a look at the QQQ. Similar price action, XLK, similar price action. Let me go over to the futures. Also closed in negative. I would have thought it would actually reach in this region, but it looks like it's a weaker than that. That's why it has not done that. Now, one of the things is, let's go back to the weekly chart just for new subscribers to show them. This is the big ABCD that we talk about, which NASDAQ has completed. S&P 500 has not done that yet. Dow Jones has not done its ABCD, but it has done the 1.618 expansion. And let me actually show you that. But before we take a look at, let's actually move to the Dow Jones Industrial Cash. Here we go. um, and what we see here, you can see that it came very close to 1.6618 expansion of its BC swing. It also made a new all-time high. Now if we move to the futures, and futures also made a new all-time high, and let me show you that. Look, also it closed at negative. The Dow Jones was down, with all the futures closed about 86 points lower, or 0.2%. Not a lot, but it came off the 1.618 expansion. And there is this as well, which I've not drawn. I think it's gonna be the let's see if it is 1.272. There you go. So I think there is a fair amount of resistance because of 1.618 and 1.272. So I think we might actually see follow through the downside. We'll have to wait and see. Now, before moving to Russell, I really want to show you something, which is the SOX. This is the semiconductors, and now the semiconductors, you can see this trend line. This is something which we discuss in our video when we take a look at the sectors. So the semiconductors are under pressure, and where it has found resistance, not only because of the trend line, but right at the 61.8% retracement of this swing high to this swing low as well. So it's possibly a triangle formation here. Eventually it's going to resolve, and the chances are it might actually resolve to the downside, which might be a bit of a surprise. And if it does that, then we have this potential head and shoulder pattern being formed. So left shoulder, head, and right shoulder. Ideally, I like to take a look at in terms of the time symmetry between these two. So if this is the head, then we have a time symmetry like this. And we have a very nice time symmetry as well, because these are pretty symmetric. So left shoulder, head, right shoulder. So there we go. I think it's really important that it actually gets above this. And the reason I'm saying this is because we have the same pattern formation in NVIDIA. So this is the daily chart of Nvidia. So when we took a look at the Nvidia stock, we are watching two patterns. This is the pattern on the daily chart. I mentioned that I did not like the fact that I was not able to get above the 61.8% retracement, and I didn't like this silent doji formation. It happens rarely, this kind of a doji. I like to call it a silent doji because it's so quiet. It's quite easy to actually miss it, but yet it is so powerful. So whenever you see this kind of a doji formation, especially if it happens after a strong bull bar or a bear bar, it's trying to give a message. So it's better to actually let that resolve. And in this case, I just didn't like that, so I just got out of some of my stuff that I was doing, and it is also, you can see that for 1, 2, 3, 4 days it's just been down. Um, and this trend line needs to be watched, this one. Now just moving over to the weekly chart, because on the weekly chart what we have been watching for is this point C, because this on the weekly chart is still valid that it could make a run to 155. Now the key thing is that this point C still needs to be held. Nvidia is a very strong stock, so let's just keep that in mind. But what has been stronger than Nvidia today has actually been Apple. So let's move um, to the daily chart, and here we go. And today Apple was in fact up by 1.5%, 1.8%, whereas Nvidia was down. Now it also has possible this trend line as well, and there is a possibility which we had discussed before as well. I believe it's on the, there we go. This is on the weekly chart. It's got a possibility to rotate to about 200 to ideally around 192 level, because of this ABCD. And the reason is that when the price went into this gap formation and it has moved lower, so either it finds support pretty much right here where it is now in terms of its lows of the week, to complete this bigger ABCD on the blue, or we get a chance of further weakness in Apple stock. And September is, statistically speaking, or from a seasonality perspective, a weaker month for Apple anyway. So this is what we're watching in Apple now. Something really interesting. Let's take a look at Tesla. So Tesla was also weak today, and we had taken a look at the eBay stock. Look, eBay, not a good price action at all today. If it is after the fact that interest rates were cut by 0.5%, then let's take a look at Amazon. Here we go. A muted action. Something really interesting actually happened in Walmart, because I think they have got some other issues going on. So it's just not related to. I think it's got related to um, concerns regarding potential supply chain disruptions stemming from a possible strike by dock workers. So that might be getting reflected here as well. But nonetheless, it pulled back a little bit as well. But the stock has been really strong. What else shall we look? Yeah, let's take a look at Meta. Meta did, I think, a bit okay, just sideways trading range. I did it. Yeah, I think it made a new all-time high as well, 544 and 23. Yep, 544.20. Oh, it just missed it by 2 cents. Okay. Wow. Okay. Keep that in mind. Oracle. It's got fantastic earnings, but moving lower. Anyway, so let's take a look at the last one, which is the Russell 2000, and here we go. This one closed a little bit in positive. Let's take a look at its ETF, the cash, and cash has done the same thing, but again, it's in this region here where there is fair amount of possible resistance because of this gap formation here. Here we go. So this is what we are watching today. It was really interesting to see how the markets actually moved when the interest rate announcements came out. Interest rate cycle started with a big bang because 50 basis point is actually larger cut. And the really interesting markets to watch are actually the notes and bonds market, because they're actually telling us something, and they actually closed lower, and the chances are there's going to be a further follow through to the downside, meaning the yields actually moving higher, and that could be because 50 basis point is pretty large rate cut, and it could in fact have some impact on inflation. So the inflation could be a little bit sticky, especially if the crude oil prices they begin to rise. and then that could have an impact. And maybe that is something which the bond market is sussing out, um, so that the inflation could actually be a little bit more sticky. So we'll just keep on watching the interest rate markets really, really carefully in every video that we'll do for the stock indices. The US markets is always a core component for us, so we'll just keep on watching that. And of course the US dollar is actually also likely to get a little bit stronger, and we'll wait and see whether that strength will just become much stronger, or whether it just finds and retraces from 103.50 level. So thank you very much for watching the video. Good luck, good trading, and speak to you guys soon. Have a fantastic day, night, evening, where you are, and speak to you guys soon. Bye.